Hey, good evening, guys. It is 10:23 p.m. on Thursday, April 4th, 2019. Hope you all had a good day. And just want to make a quick video, guys, regarding kind of our last big risk event news coming out for the week. And that is non-farm payroll and Canadian employment. So both events happen at the same time tomorrow, which is 8:30 a.m. New York time. So, of course, adjust it to wherever you are in the world. But they do come out at the same time, so it can be really interesting to try to trade these because you kind of have to be flexible here and be able to digest the news really quick. So, I just want to make a quick video and look at the charts really quick. I don't have any real strong opinions about these either way, but we'll take a look at it here. So for the Canadian employment, of course, putting volatility risk at 70%, which is pretty typical for any data points. Basically, they're expecting a very low number of only 1,000 jobs versus almost 56,000 last month or for February. The unemployment rate is expected to stay the same. So like most of these, especially where there's no earnings numbers put out, average hourly earnings like the non-farm payroll, what you want to do is you want to look at the part-time versus full-time. So when the news first comes out, there's always a headline number, but that headline number is a combination of full and part-time. But very quickly you'll get the breakdown of both. And of course, you want to see the full-time jobs, significantly higher than part-time because if it came out at like 20,000 but 18,000 of those were part-time or even 20,000 were part-time and the full-time was flat or negative or whatever, or you saw part-time at 25,000 and full-time at minus 5,000 to get you to 20, the market's not going to be nearly as excited about that. So, and the other thing I thought was interesting, and it's true here, is in addition to that, is just before the news come out to look at the price of crude oil. The Canadian economy is very heavily dependent on oil, and so the higher oil goes, the better it is for their economy. So I think oil was down today, but so take a look. You can look up WTI crude price on. You can just Google it. You'll find lots of sites and charts that have it. And just a few minutes before the news, or half hour, or an hour, or whatever, just go and look at the price of crude and just kind of know where it is, where it's trading on the day. Is it up, down, whatever. And so basically what they're saying here is if the employment news is positive all around and crude is up, that would be a much stronger conviction trade to the upside for the Canadian. If one is down and one is up, may not have such a big impact. And of course, if they're both down, then that would be more of a driver to the downside. So that's it on the CAD. And of course, since these both come out at the same time, the most interesting pair to look at is the US Canadian because it affects both of those. So you definitely want to see a deviation between the two currencies to even think about trading the US Canadian. So just keep that in mind. Because obviously, if the news is positive for both, the US Canadian is going to just whipsaw back and forth and it's not going to do anything. So, but if there's a deviation, one's really positive, one's really negative, then you got yourself a good trade. So the yellow one is, of course, non-farm payroll in the U.S. And, of course, the components to that are unemployment rate, average hourly earnings year over year and month over month, and, of course, the actual job number. And so if you remember last month, we had a very low number in terms of jobs, only 20,000 in February, which was really a surprisingly low number. But they're expecting 180,000 this time, which is a pretty good number. And they're expecting the average hourly earnings, which is really the more important number, because average hourly earnings is a measure of how much people are actually making. So you can add all these jobs, but if people's wages and earnings are not going up, it's not as thought to be as positive. So average hourly earnings, to me, is actually the more important number to watch. And so they're expecting that to remain, the year over year to remain unchanged, and the month over month actually tick down slightly from 0.4 to 0.3. So we'll see. And the unemployment rate is expected to stay at 3.8%, which is very, very low. unemployment. I mean, I just can't imagine it going any lower than that. But hey, you never know. Anyways, so really what you want to see is all these things lining up. Okay, so if you're going to trade the dollar, you want to see really across the board, either really good or really bad. Because if you get a mixed number in here, you get some green, some red, like let's say the unemployment rate ticks up, but average earnings goes up, or say average earnings goes down, but the job number is higher. Now you're going to have a lot more indecision in the market. And so sometimes what you see is an initial spike when the headline comes out, and this is really happens a lot with the Canadian. But it can happen here too, where a number will come out, the market will bust in one direction a little bit, and then all of a sudden, traders kind of get a hold of the data and crunch it a little bit, and they're like, "Ooh, maybe it's not so good or not so bad," depending how it initially goes. And of course, the big banks and everything are going to take advantage of that in terms of trying to grab some liquidity to push it the way they really want to push it. So be just, I always tell you to be cautious with these. And non-farm payroll does have its times where it doesn't do anything, where you get a big spike up, a big spike down, and then the market just stops, and then you end up unchanged in the end, where you get a big wick on either side and then a little candle body in the middle, and all you did is get whipsawed in and out of the market, and you lost money because in the end it was a nothing burger. You get past that initial volatility. So be cautious of that. That's why I don't tend to jump into these anymore until after they come out, and I'll take a few minutes and kind of digest the news myself, and then I'll decide if I want to get in. And that also gives the market time to decide if it really wants to have a sustained move or not, because a lot of those reversals where, like I said, it spikes in one direction, those can go on for a period of time, maybe only a few minutes, maybe a half hour, an hour, and then all of a sudden you see it start going the other way. So the bottom line is, if it's a good number and it's a good or a really good or a really bad report, there's going to be plenty of time to jump in, right? So just be cautious of of how you do this, okay? And I find the Canadian one very particularly subject to spiking. All right. And let's see here. Sorry, guys. All right. So just let me just take a quick look at a couple of charts here. So I did want to look at euro dollar. I really don't trade the euro dollar on it. I got to tell you guys, this is not a pair I trade. I know it's the most heavily traded pair in the world. To me, it's not a good pair to trade, but that's my opinion. So, but I did have this drawn out. So this is the 30-minute chart, guys. So, man, this is a short-term chart. But I have this basically as a 1, 2, 3, 4. I mean, this move up here definitely looks like a correction. So I'm expecting, I want to see where this price is tomorrow morning before the news comes out. If it's still chopping around in this area up here, plus or minus, I'll look for an initial short, but I don't think it'll be sustained, and then the market will turn and go up. So this is one of those ones where if this plays out and the price is still up here before the news comes out, that you initially, so that means it would be dollar positive to start, and you see this thing spike down, maybe take out this low or come down this low and then quickly turn and reverse. It ends the trend and then it turns back up. So be cautious if that's the case and you're going to take it short. Just be aware that that could be a short-term move. And so, of course, the opposite of that is the U.S. Swiss. And so here's the U.S. Swiss. So this is a higher time frame here. So now you see this move up here, which potentially this area here you could say is a correction. You have overlapping waves. It is going up right now. But remember, this is an 8-hour time frame compared to the 30-minute on the euro dollar. So naturally, this is an 8-hour. This move down could be much more sustained. That's why I said initially maybe this would be the opposite. You'd see a little spike up on the U.S. Swiss, and then it would turn down. And this turn down could obviously be much more sustained because this is a much longer time frame, right? So again, guys, just going by the charts. I'm not talking about in the end how it comes out, and like I said, I will wait for the news to come out. But the early look tonight, 10 hours before the news comes out, is that it will be dollar negative. Maybe not initially, but once everybody crunches the market, I can see it turning dollar negative at that point. So maybe we get a disappointing number. Maybe the jobs number doesn't come out as good. Maybe the unemployment rate ticks up. Maybe the average earnings drops more than they were expecting. Who knows, right? So I will wait till it to come out, but that's my early look at it. And then for the CAD, I will definitely not be messing with the CAD until I see the numbers. So this is the Canadian yen. This is the 8-hour chart. And I can see this potentially maybe finishing a trend here. Something like this. I don't know, like this. But this is a long-term chart. So, this could push up and, maybe have a decent day tomorrow. And then, that maybe ends the trend next week. I don't know. That's the early look. And the Canadian Swiss, kind of the same story here. I'm kind of seeing this. This is also the 8-hour chart. And I think you could see some good Canadian strength. So potentially that this is 1, 2, 3. Just label this here. Potentially something like this, potentially something like that. And again, this is a longer term chart. So again, if the price is kind of down in this area tomorrow morning, anywhere between where it is now and down low here, then I could definitely see this going up. Maybe you see a spike down when the news comes out initially. Maybe the market takes it negative, spike it down to these lows, and then turn it back up. Now, if this holds, then, which means dollar weakness, Canadian strength, then a potential good trade would be the U.S. Canadian short. Okay, so I can just find that really quick. Let's look at that. Okay, here's the U.S. Canadian. This is the 4-hour chart. And zoom out a little bit here. Yeah, I mean, I don't really see anything at first look here that's too exciting. However, this, you can see there's a real big area of resistance right here where the price is kind of trying to come up to. Let's drop down a little further on the time frame. 1, 2, 3, 4, 5. Price maybe goes up, retest this high, comes back up here, hits these highs again, and then turns down on the news. I could see that maybe. So again, guys, please, if you ever listen to me now. Do not take any trades based on anything I'm telling you, because again, we're 10 hours away from the news, and I don't know exactly, obviously, how it's going to come out. But my early look is dollar negative, Canadian positive. Now, let's keep in mind that the United States, U.S. dollar, and the U.S. economy is very strong. It's going to take something really disappointing to push the dollar lower, because the U.S. dollar, as usual, is the strongest currency, the strongest economy, best currency, fundamentally is still strong. So it's going to take something pretty bad to send this down. But if those numbers disappoint and they're kind of all in line, maybe they're all negative, or if one of them is really disappoints, then sure, it could happen. Now, it might not be a long-term trade. It might just get you through tomorrow, maybe into next week with some sentiment, and then, that kind of wears off and it starts to strengthen again. But so just beware, guys. That's what I'll be looking for. But I will wait till both sets of news come out, and I will take my time and analyze it and see what the actual numbers were across the board, part-time, full-time for the Canadian, and looking at, not just the job numbers for the U.S., but the unemployment rate and the average hourly earnings, and see where those come in. And that's what I would do. And of course, like I said, look at WTI crude oil price for the Canadian tomorrow morning before the news comes out, and just have that in your back pocket as confluence with how the news comes out. So again, if crude oil is rallying and the Canadian news is good, that's going to give extra incentive to push it higher. But vice versa, if crude is down and the Canadian news is down, that's going to give it incentive to go lower. And if it splits the difference, then just don't expect as big a reaction. I think the employment numbers will trump the crude oil price, but if they're in line with each other, it's just going to give it more confluence. If they're divergent from each other, it may hamper the move a little bit, but doesn't mean there won't be a trade. So, anyways, guys, that'll round out the week. Always interesting. Doesn't necessarily mean there'll be a trade, but line up and trade in line with the fundamentals, but also keep an eye on your charts too, because there is some potential setup. So we'll see. All right, guys. So that's it. Maybe I'll make a follow up. Probably I'll have to wait and do it late tomorrow, but I'll try to do a follow up and see where we actually end up. All right, guys. Have a terrific night and good luck tomorrow. Happy trading. Be safe, and we'll talk to you all soon.